and we can talk about this a little bit more, but, you know, AI is really exploding, as everybody knows, and that's no secret. I think we hear a lot about the build out and the hardware build out and the capital expenditure and the data centers. I think those come first, and then the big foundational models kind of come after that, you know, the OpenAIs, the Groks, et cetera. I think the next layer is where GFT Ventures has chosen to play, and that's really in the applications that sit on top of that. And you know, I think we can talk about why we didn't play in the other spaces, but we've been kind of waiting for these applications to finally explode, and I think we're here. And what's interesting is, you know, the news cycle is full of AI, and half the people are super excited, look what's happening, and then the other half are, hey, this thing's a bubble, it's going to burst. I think they're both legitimate approaches to the same theme, but things take time, and I think what you've seen is we've seen, you know, the platforms start getting built out. You needed to have enough computing power in the cloud to take care of all the language models and eventually the applications, and we're off and running. So that's kind of how I see the world right now.
So Jeff, you kind of touched on this. You know, we have had a much longer timeline with AI than most people are familiar with. You both have been around the space for 20 plus years, whereas the real boom has been in the last 3, 4. Could you tell us a little bit, well, let's start with how the two of you came together, why you wanted to put together this fund. You touched upon it a little bit, but what is the mission behind this fund? You know, why did the two of you decide you wanted to invest in AI together? What brought the two of you together?
Once again, my thanks to the organizers for inviting us to this great event, and thank you for the audience to participate. Jeff and I, we've known each other now for almost 25 years. And that's a long time. But of course, all of us have people that we've known for long times, but that doesn't necessarily mean that you will start companies together and become partners. So Jeff and I, we share a common background. We both were leading venture capital investments for some of the leading tech companies. So in Jeff's case, he was with NVIDIA since 2001, heading up their M&A and investment program, as well as creating NVIDIA Inception, which is their accelerator program. And I was also on the corporate side, where I set up Samsung's US venture capital operations in 2003. And so we've known each other for a long time, but there was serendipity because we literally ran into each other at a local boxing gym in Silicon Valley, where we started to work out together for over a decade. At least in my case, 3 times a week, Monday, Wednesday, Friday. Jeff would work every day of the week. I needed a break in between because I couldn't keep up. But once we established a basis of friendship, then we ended up working on investments together. One of the very early successes and IPOs for AI companies is a company called SoundHound AI. Some of you may know them. They're a public company. I think they went out 2021, so almost 4 years ago. And that was one of our first of many co-investments together. And so being early in the domain, we were able to identify trends from the very early days, from the internet wave to the mobile wave, infrastructure, and now AI. And once you see the pattern for multiple different waves, then we'd like to think we develop some pattern recognition. Because once you have enough data, then you can actually see a pattern. And what we both saw early days was that even though the internet and mobile and other technology waves were really disruptive, Jeff and I, we both concluded that AI would be the biggest disruption that we would see in our lifetimes. And even though we were with different firms at the time, Jeff was still with NVIDIA, I had co-founded a firm called TransLink Capital. We thought that, and this was during the pandemic in 2021, where all of us had an unexpected sabbatical for us to actually think about what we were doing versus what we actually wanted to do. And both Jeff and I, we concluded that we wanted to start an early stage venture capital firm that focuses on frontier tech investments, thus GFT, Global Frontier Technology Ventures, but with a very strong concentration on AI and data science investments. And so that's the story of how we decided to launch GFT together. It's been 4 years, and we were very fortunate because a year after we launched the fund and getting ready to close the fund with our original $100 million target, in November of 2022, ChatGPT gets launched, and all of a sudden AI becomes popular for everybody. So for folks like Jeff, who'd been investing in AI for 20 years, in my case for about 15 years, we had already seen the momentum build to a point where now it's become very ubiquitous. And literally every investor in Silicon Valley is now investing in AI. But it helps that we have been investing in the category for a long time. We know the entrepreneurs, we've built some credibility, and that's enabled us to actually be quite successful with identifying some of the most exciting AI companies. We mentioned Higgsfield. We also have one of our other companies, Bria AI, and the CEO Yair here, who is also a speaker. And so being able to identify the pioneers and the industry category leaders in this field enables us to be hopefully quite successful.
Yeah, I'll give a little bit more color to the origin story. So I just happen to be really into sports, like all kinds of sports, and I was a big fan of the Rocky movies. And so I found this local boxing gym in San Carlos, California. I'm like, that looks like fun. You know, I'm gonna get in there and mix it up. And so I started going to the gym, and then you know, Jay and I was getting in a ring once in a while. I stopped doing that. It's really, my advice is, unless you're really good at it, don't get in the ring, because the headgear doesn't protect your brains from scrambling. So I think I'd be a lot smarter if I didn't do that. Our fun would be 10 times the size if I didn't do that. But anyway, I knew who Jay was, and I interact with him. But I think sports is like a great way to get to know people. Like, you know, this is why I'm a big fan. I'm a little concerned that we're not letting our kids do enough sports in the U.S. now, because this is where you make a lot of your friends. And so I think because we did that, it was much easier for us to be comfortable forming a business together. And you know, I put faith in Jay. You know, he came to me. I was at NVIDIA. I knew when I was at NVIDIA, I mean, I'd been there 20 years. I knew that NVIDIA was going straight up and to the right. And he convinced me, and it didn't take a lot of convincing, because even though I'd had a great run at NVIDIA, I always knew that I wanted to run a venture capital firm. It's just in my blood. I mean, people told me 25 years ago, you should be a VC, you should run a fund. And working in the corporation is great. And I was running the fund, but I had like 10 different jobs, which was great. So I took the leap of faith. You know, you see a window open of opportunity, because most people don't realize it's not that easy to start a venture capital fund. I mean, it seems really easy, right? Like, oh yeah, hey, I got money. Well, where are you going to get the money? You know, that's job number one. I mean, it's people. We have our own investors, just as we invest in Bria and in Higgsfield. We need to raise money ourselves. So we're giving out money and we're raising money. And I felt Jay was a real expert in starting the fund. He had a lot more experience than I did in the fund side of things. I probably knew a little bit more about where the ecosystem was going. So we put those things together, and, you know, 1 + 1 = 3. So that's kind of how we started. And I think, you know, I was telling Jay yesterday, I mean, don't get me wrong, NVIDIA was a rocket ship. He probably cost me a good amount of money by getting me to leave NVIDIA when I did.
He made enough money at NVIDIA.
But I stand by the timing was great for us to do it, because you don't want to be too late. Now everyone's trying to start an AI fund, but I think people know we were early. We had some early learning, some great early investments, and now we're off and running, and we expect to have this be a multi-decade franchise.
Yeah, Jeff, you might be the only person who's saying right now he doesn't regret leaving NVIDIA in the last 5 years, because everyone's looking at the stocks right now. But it seems like it was the right choice for you. So, you know, you both touched on the growth of the AI space. Obviously, it's been one of the only things people have been talking about over the last 3 years. As exciting as it is, I imagine that probably brings you guys more competition, not only from raising money from LPs, but also getting into the exciting the exciting investment rounds. One of the things that not as many people talk about is that not only is it hard to raise money, it's actually hard to put the money into the right startup, even if you know them, even if you find them. So what would you say is the competitive edge that you try to bring to convince both sides that you are the right people to either put money into or take money from?
Yeah, I can take that. So, there's a lot of different ways to do venture capital, right? There's the spray and pray method, right, where you just raise a bunch of money and you put small checks into a lot of companies. You don't spend any time with it, and you just pray that one or two of them do really well. That requires a level of hustling on the ground level where you may not know anything about anything, but you're just in bars, restaurants, conferences, just trying to meet everyone. That we realized that didn't make sense for us. That wasn't the way we were going to do it. Where we really focus is, I have 20 years of operating experience in NVIDIA, including, building one of the biggest companies in the world. Jay ran Samsung Ventures. He ran TransLink Capital for over 15 years. We actually had a little level of maturity and a level of insight that most people don't have. So our strategy is, and I agree with you, there's a lot of what I would call deal chasers out there. I'm just trying to, it's kind of like, you guys may not, I'm not supposed to tell jokes, but you guys may not get this jokes, but when my brother and I, used to sit down to eat at home, it was very competitive. And, he wanted a certain seat and I didn't. So he'd just go in there and lick the fork real quick, and that's his seat, right? I'm not touching it. That's kind of how venture works, People are just trying to get there first. And, it can work. But in our case, where we feel like we do well is we get invited into some of the hottest deals. Like Higgsfield, as an example. So they just raised $50 million. That's a big deal for us to lead. But they had every VC in the Valley was trying to lead that deal. But why did they want to work with us? Because we're adding value to them on investor introductions. And they knew that because I had been at NVIDIA for 20 years, I could help them with their cloud relationships, with their hardware relationships. This is just one example of, we're not fighting our way into deals with the most amount of money or the highest valuation. We're coming in a world where, honestly, a lot of VCs don't have a ton of real, operating experience in companies and real experience, and we're adding value. And so sometimes we don't even pay the highest valuation, but companies want to work with people that they trust, that they know are going to give them good advice, that they know how to operate companies, because and you'd be surprised. There's even funds with big amounts of money that people don't want to work with. So that's kind of how we choose to do it. And it doesn't require us to have an army of business development people going to every conference. We have a lot of trusted relationships, I see there's Quinn from Qualcomm. He's just an example. He's here, he spoke yesterday. Jay and I know every corporate development person and every big company around the world in technology. I was the chair of the AI Council for what's called Global Corporate Venturing. So we built a web of relationships and a track record of operational experience and a track record of venture experience. And the last thing I'll say is, we're not the youngest guys in the room either. I mean, we're not old guys, but we're not fresh out of school and trying to break into this. We have experience, we have track record. So that's how we choose to do it.
You touched upon the corporate venturing side. Jay, you've spent most of your experience on the corporate venturing side. Could you elaborate a little bit on that as well? What does having this corporate venture network provide for the startups who want to work with you? Why does that attract the startups?
Yeah, so again, we're living in an age of abundance in capital. There is a lot of venture capital money out there. And the reality is not all capital has the same value. What I mean by that is we'd like to think that our investment includes in the package, it's bundled in, a lot of those value-added activities that we just talked about. Now, to be specific, if you are a startup, once you have capital and you've gone through a product development cycle where you now have a demo, a prototype, a sample, you're go-to-market ready, then the most important thing for you as a startup is to find that first customer or go-to-market partner. And the chances are that that first customer or go-to-market partner is going to be a corporation that is already an industry leader, that is already on that cutting edge, studying the space, understanding the technology. So the chances of that first customer being somebody that Jeff and I know, because we have been part of the global corporate venture community for the last 20 years, is very high. Literally, these folks are our friends that we grew up with for the last 20 years. And because we were in their positions in our prior lives, we can make a very credible, warm introduction. For example, if somebody wanted to have a conversation with Qualcomm, we can pick up the phone and call Quinn, and Quinn would understand that we would have filtered the quality of the company and only make a very relevant introduction for him. And because of that, he would take that seriously, he would take the meeting, and all we ask for in return is his unfiltered feedback, which helps us with our due diligence. Because if a big customer, a go-to-market partner, is telling us that whatever this company is doing, the market space they're going after, the technology that they've built, the product they're building is actually very relevant and useful for them, then that means this could be a very exciting investment for us. And so having that network that we still maintain and nurture and participate in is one of our biggest advantages, because, again, what's more important to a startup than customers and go-to-market partners? And that's where we can add a lot of value.
Yeah, I think the idea that not every dollar is worth the same really rings true. I'm sure a lot of people in this room have heard the news that a lot of AI scientists are turning down, $100 million offers from Meta because they don't feel like it's the right place for them. And I think a theme that we're coming back to a lot right now is the value of the relationships that you all have built over the years and how you leverage that to provide, as you said, meaningful introductions. So I'm sure a lot of people here wants to ask your thoughts on the future of AI, if you have a crystal ball. And I promise I will get to those questions later. But before I do that, I also wanted to ask about looking back at the last 20 years. Everyone's talking about ChatGPT 2022. That's when this whole thing blew up. Are there some signals that you saw prior to that gave you a hint at what might be coming? Because I believe that if we want to be ready and open to the next potential boom, whatever might be after AI, what were some of the signals you saw back then that might be a good lesson for us to learn right now?
Okay, that's a very open-ended question, but let me give it a shot. So, there was this contest at Stanford called ImageNet. Many of you may have heard of it. It was basically a contest about computer vision, and most people were using kind of algorithmic approaches, and basically they were just trying to shove up a bunch of images, and the contestants were supposedly trying to figure out if it was a dog or a cat. And it was actually pretty hard, and especially if you're trying to program algorithmically, if, then, else, if you have a little whisker here or this here. It was very, very hard, and I think it was finally around 2012 that I forget the guy's name. I think it's one of the. It might be Ilya Sutsketer. I'm not sure how to say his name, but OpenAI founder. I think he showed up with the AlexNet. I may have this wrong. It's been a while, and they were able to show accuracy rates for identifying, these animals that were much higher than anybody had ever done in the past by a huge margin. And the reason is because they were training some of the first convolutional neural networks using the NVIDIA GPU platform, assisted by CUDA. And finally, there was enough compute horsepower, provided by these GPU farms where they could actually train a model. I think probably it was like 3 to 6 months to train that first model, which is different than 1,000 years, which was before. And there was enough data available for them to do it. So that was kind of the initial indication to me that, hey, this AI thing that we've been talking about I studied it at Brown. the books written about it. No, the algorithms themselves are actually not that novel, to be honest. There just wasn't enough compute horsepower, and there wasn't enough available data to go train these models. So that was kind of the first signal to me that I thought we were on the boom of an AI revolution. And I think computer vision took off fairly quickly from like 2012 up until 2021. And we were seeing nice growth. I mean, the transformers, which form the basis of what we now know as ChatGPT, those were invented at Google in like 2018, I think, and nobody wanted to spend the money to go train a large language model broadly enough that it could be very useful, because unfortunately it was really expensive. So no one really saw that the cycle hadn't started. So I thought we had a really good traction in computer vision, which led to a lot of research in self-driving cars, which arguably is still an area of open. We've invested in the self-driving truck area. Actually, we've invested in a company called Mars Auto, which was started in Korea, doing self-driving trucks, which is basically using computer vision and other algorithms. But so you saw that happening. But people tried to build chatbots, using natural language processing engines, which were just really clunky and really bad. And I knew that conversational AI was going to take off, but I wasn't thinking that transformers going to be the way. So I think it was only, there has to be a technology there, but there also has to be, you have to show a proof point. And in the case of computer vision, maybe it's AlexNet. It's a proof point, like, hey, we should invest in convolutional neural nets. We can actually do computer vision, and people start investing. And I don't think it was until kind of ChatGPT came, I think it was ChatGPT 3 or 4, I lost track, where they actually had a useful way of using a transformer model that people said, wait a minute, these things can actually be super useful. Here's the technology. Let's go throw the investment in. So that's kind of where I think that came from. And by the way, I look at this as a VC, I look at the world very high level. I try to simplify. My rule is I try to take complicated things, I try to simplify it for myself. And so where I see the world going is I think we've tackled imagery, and I think there's a lot more to be gained. I mean, we still don't have self-driving cars all over the world yet. I mean, we're getting there. I mean, Waymo's doing quite well in the US, although I think their solution is way too expensive because, but they have Google, Google funding it. But I still think we haven't kind of tackled what goes on with data. I feel like we got images, we got, text, voice, but what about all the massive amount of data that are sitting around that have patterns that we can't recognize? And I'm talking about financial data, any kind of data, that's unstructured data incorporated. So I think I'm looking for the signals when that's going to take off, and I'm starting to see that. And then, of course, Jay can talk a little bit more about robotics if he wants. I'll let you kind of take that and where that's going. I mean, all these things are going to happen. It's just a question of, when, how much does it cost? And, right now, a lot of the activity is around text and voice models, but there's plenty more going on.
So just to kind of, I guess, contextualize and simplify, as you say, what we all saw with, I think it was ChatGPT 3.5 or 4, the conversations people were having, you tie that back to these tests of, is this a dog or a cat? So that's what started it, and 10, 15 years later, this is where we are now. You touched on robotics, so Jay, I'll toss this to you, especially, we kicked off this year with Jensen talking about physical AI and that particular future. So what are you seeing in the robotics space? And I'll throw on, are there any specific portfolio companies that you're excited about that might be the future of what we want to see in physical AI?
Yeah, I think since you asked the question about spotting the next trend, we talked about the last 20 years. I mean, the reality is it's almost impossible to have the perfect timing. I don't think Jeff or I necessarily predicted that ChatGPT would be launched in November of 2022 and it would explode, but we saw the accumulation of momentum leading up to that. And when we talk about pattern recognition and understanding what could be the next trends, I think it's really important to try to figure out who are the leaders in the ecosystem. Because those leaders in the ecosystem are the ones that are going to see with all the data around them to be able to predict and move in that direction. And as investors, we want to be the first early movers that follow the leaders. And in many cases, these guys are the entrepreneurs. So the entrepreneurs typically are the smartest guys in the room. They're the most aggressive, ambitious folks. And so they are on the ground constantly looking for the next opportunities. And what we've seen over the last 25 years is that the smartest guys were the earliest guys that caught the wave of the internet. The same guys moved as the next wave shifted to mobile. The same guys, as AI is exploding, are the guys that are starting AI companies earlier than others. And what we found is that by working closely with the smartest people in the room, the entrepreneurs, they are actually the ones that provide us with the data and information of what's coming next down the pipeline. Now, we're also aided by a tech visionary like Jensen Huang. And Jeff told me this many, many years ago, before we even talked about working together. He encouraged me to come, he invited me to GTC, NVIDIA's global GPU conference, and make sure I sat in and listened to Jensen Huang's keynote. And he goes on for 2 hours, amazing. But what I remember from that is almost everything he talked about then, 5, 6, 7 years ago, is now happening today. And so when Jensen talks about physical AI and robotics, and he's been talking about this for the last couple of years, then all of us should take that very seriously. And I'm also seeing on the grassroots level, some of the smartest entrepreneurs are now starting physical AI robotics companies as well. And that's why we've also made a number of investments in that category with some industry leaders. We have companies that come out of Tesla that have worked on the autonomous driving projects, that have worked on their Optimus humanoid robotics projects. We have entrepreneurs that come out of Fanuc, which is the leading manufacturing robot company in the world, originally from Japan out of their Silicon Valley office. We invested in a team that comes out of Apple on the mass scale manufacturing team that worked on closely with Foxconn to actually build out the iPhone manufacturing. And all of these guys are on the cutting edge. They are capable teams. They are seeing the potential of the technology, and they're starting companies to take advantage of that. So we tend to follow the leaders, and those leaders are the entrepreneurs.
Yeah, I think the question is always timing, right? Like, I think as an investor, you tell me if I get this wrong, but I think you want to be like, when I show up to an appointment in Korea, on time is actually about 10 minutes early, right?
Yes.
If you show up at the exact time, you're already late, right? So am I right? Did I get it
Yes.
right? I learned this the hard way because I'm always late to the meetings in Korea, and I get yelled at. So I know they give me bad looks, but but they give me a free pass because they say, oh, he doesn't know he doesn't know any better. But I think the same is true of investing. It's really hard to be on time. You definitely don't want to be late because you've missed it. And so the question is, like, when do you invest? And one of the things I learned at NVIDIA was, this may seem counterintuitive, but we like to invest in $0 billion markets. What does that mean? It's like, well, when Gartner finally acknowledges that there's a big market for whatever you're doing, it's probably too late. So, and you could say, well, they don't teach me that in business school. No, they actually don't. They teach you in business school, don't invest until there's a big market. And so you can go work for a big company, like a Samsung or an LG or an IBM or whatever. That's not what we do for a living. We work with entrepreneurs who are seeing things before anyone else does. And so I'm not saying there won't be a market, but you have to see a disruption that will create a market. And by the time that market exists, you're ready, willing, and able with the product. So like, and how do I tie that back to NVIDIA? We built this CUDA thing, I think it was 2007, 2008, we announced it. We were building high performance computing processors. I mean, I was getting blue in the face trying to get people to adapt software to our high performance computing processors, which is essentially the same architecture that's fueling AI right now. And the reason we built CUDA wasn't for AI, we built it for high performance computing. And it turns out that the killer app for high performance computing right now the first killer app was computer graphics, right? And that's still doing well. The second killer app turned out to be AI, but it was more of we created the platform and then the market found us. So I think sometimes being a VC is kind of different. You have to be a little bit forward thinking, and sometimes a little bit if people don't say you're a little crazy about what you're doing, maybe you didn't do the right thing.
Yeah, now that I think about it, it's crazy to think that, I had gone out to buy graphics cards to play StarCraft when I was a kid, and now that you can tie a direct line from that into the crypto market and the AI market.
Well, you know how it happened was I was at NVIDIA, and we had all these people, these scientists that were trying to build fluid dynamic systems and thermodynamics and electromagnetic simulation using GPUs, and we're like, what are you doing? Well, they're programming using an API, a graphics API, DirectX or OpenGL, and so they showed up. They just came and they invited us, and we're like, wow, how did you do this? You actually, that's what's called a kludge, right? And that's kludge programming. I'm taking a language and I'm translating it just to get the job done. And so that's when we said, wait, we should go build a compiler. We should build a language that actually talks to the GPU in a C-based programming language, and that was basically CUDA. So the customers were kind of telling us that they wanted to do high-performance computing, and it was the same graphics processor. And so once we saw that, we started building a platform around it, and then AI and convolutional neural nets came, transformers came, and you tell me what comes next. I don't think the transformer model is the end-all and be-all. I think it's a approximation of knowledge using extreme amounts of compute and a high level of pattern recognition on large amounts of data. It actually works, but it's kind of a brute force method of doing it. So I think we're going to find new ways and new models. And now that there's a platform out there that's extremely powerful and has a great programming interface and is easy to use, the researchers are coming. So it's the flywheel effect, right?
So, Jeff, you've kind of been in the center of this, being with NVIDIA for 20 plus years, and you were there to see it. I'll start off. But from a global perspective, Jay, I want to toss this question to you. What have you seen in terms of global trends and how, I guess especially in East Asia, companies, corporations, startups, universities have been trying to be a part of this, especially, whether they're startups trying to go into the U.S. or investors trying to invest in the U.S. What role have these global players played in the recent AI boom? Sorry, that's a very open.
No, I think, and again, it's such a broad question that I kind of have to narrow it down a bit. So let's just talk about specifically AI, and let's just simplify the universe as Jeff likes to do as well. So if you look at the AI tech stack, there's multiple layers you can talk about, but simply put, there's infrastructure and then there's applications. And in the infrastructure space, we have the chip vendors, the servers, and even platforms like LLMs, where applications are built on top of, we would consider infrastructure, okay? And then on the application side, there are horizontal applications that cover more generic, different tasks and specifics, or it could be vertical applications for every industry, from agriculture to advertising. It could be business function driven, so there could be an HR AI application, or R&D driven, or sales and marketing. There's a lot of different ways to skin the cat. Now, what I've seen is, and I know there's a lot of conversation around sovereign AI, and Korea, among other countries, feels that it's important for national security as well as for the future economy that we have a core base around that. And I totally agree with that. But for many of the entrepreneurs, and I think many of you here in the room are entrepreneurs that are going to be starting companies, not everybody can necessarily build a NVIDIA competitor, GPU competitor chip, or they won't be able to necessarily build an LLM platform, because it's not only the technology, but the amount of capital required is quite substantial. But what a lot of entrepreneurs globally, including Korea or Kazakhstan or Israel or Poland or Indonesia, all of these entrepreneurs can build are applications, okay? And traditionally on the application layer, having domain expertise and local knowledge is a way to be very competitive among the big giant companies. We all know in Korea that domestic companies have done really well despite the fact that global hyperscalers have constantly tried to penetrate the Korean market. And so when we think about those opportunities, I think it's really important that we focus on those specific expertise, domain, geography, because yes, we will be able to build competitive applications. Going back to the earlier point about why we focus, GFT focuses on applications is very simple. So all of us knows from the internet era, there were infrastructure players from the chip developers to the servers, the routers, the fiber optics infrastructure. They made a lot of money. But on top of that infrastructure, the bigger multi-billion dollar revenue companies, more than 100 came from the internet era. Several dozen came in the mobile era. Yes, Qualcomm did well on the chipset side, and Samsung and Apple did well with the mobile handsets. But think about all the mobile application companies that have become multi-billion dollar companies. We believe it's going to be the same in the AI era. While NVIDIA is going to continue to crush it, and there's going to be other LLM companies, there are going to be several dozen, if not more than several hundreds, of AI application companies because they are domain specific, they're focused. It's almost like when you go visit a doctor, if you want to do a general checkup, you go to a generalist doctor, he'll give you your general checkup information and whatnot. But if you're in real pain, if you need, if your leg is hurting and you might consider it, it might be broken, then you see a specialist. And so all of those AI application companies are specialists, and those are the ones that have a chance to survive against those horizontal LLMs. And those are the companies that we want to invest in.
So as we get ready to close out then, I'll try to present you with a specific question as we look towards the future. You mentioned that you actually have at least 2 portfolio companies here in Korea right now presenting for WKF. I'll give each of you a chance to shout out one of your portfolios, what they do, what you're excited for about what they might be doing right now, and why you invested in them, why you think they're going to be the future of AI. So one company that you want to shout out. Not to put you on the spot.
I'm actually going to give you a couple, if that's okay, just because I feel like
hedging his bets.
No, it's a couple that I've been thinking about that are doing really. I'm just thinking about it. So one of our companies, really interesting, and I've been working with them ever since I was at NVIDIA, called Artisite. It sounds really simple, but at least in the you guys actually have a better healthcare system here in Korea than we do in the U.S. I may have to move here I feel great now, but if I ever don't feel well, I'm going to move here because I'm going to get better healthcare. But we have a big problem in the U.S. We have a nursing shortage. It's really expensive, and hospitals are really inefficient. And everyone's trying to develop drugs using AI and do diagnoses using AI. I think that's all going to come, but it's going to take longer. The low-hanging fruit is actually going in the hospital and putting in cameras and microphones and tracking how operating rooms are running to make them more efficient, tracking patients with remote nursing, making sure that everything that happened is tracked and monitored. And so this company, Artisite, is growing like a weed now. They basically go in all these, they've got deals with all these major hospitals, and they go and put a camera and a microphone in every patient room and operating room, and they've increased their ROI, return on investment, is huge. Like, you need fewer nurses, patients get in and out faster. And this is like, and you're going to be hearing more about it in the next year or two, but this thing is about to explode. So that one I'm pretty excited about. And then we have another one called KNIT. We just actually led their Series A round. I think they raised $16 million. They're using AI to kind of take over market research, like people like Gartner, do all this research. They have people doing focus groups and surveys and searches. They've automated the whole thing. And it's the reason I like this one is one of my themes on AI is, everyone's talking about artificial intelligence. I think some of the best low-hanging fruit is augmented intelligence. Keep the human in the loop, at least at some point. Don't supplant humans, because people won't adopt the technology if they're going to lose their jobs. We didn't touch on that, but I think AI needs humans still more than humans need AI. I actually believe that. A separate conversation. I think we got a long way to go before we reach AGI. But this company is growing like a weed. This whole space is, they're able to do with, focus groups and things like that in an automated fashion, and basically stitch together all these different pieces of information and provide, research on which products are going to sell and which advertisements are going to work and so forth. And so I really like those two right now. In addition to Higgsfield and obviously Bria, I'm sure you want to talk about that, Jay.
Yeah, I mean, collecting data where you didn't have the data before and increasing operating efficiency is going to be...
Yeah, I mean, at the very heart, I was trained in computer science. I mean, I boil down what we call AI today to pattern recognition on large amounts of data. That's all we're basically doing now. It seems like magic, and it kind of is, because when you put that much compute, I mean, the algorithms are really, there are things you can do with the algorithms that some are better than others, but a lot of them are open source. So that's not where the value is. It's kind of in the compute and the data, right? And so the more amount of data that you can collect, the more you learn, and then you pump it back into the system, and then you get better and better.
So Jay, just to be fair, two portfolio
Sure.
companies for the future of AI.
Yeah, no, I think, again, everybody in the room has probably personally used ChatGPT or some form of AI application, right? And yet, as we know, some of us that work for big companies like a Samsung, you're actually banned from using ChatGPT at work. And many of us will remember there was a globally publicized incident where one of the researchers at Samsung used ChatGPT and put very sensitive data up into ChatGPT, not knowing that that data was going to go up into the cloud, and that was no longer going to be confidential, right? And so a good friend of mine who still works at Samsung told me it's still banned across the group. So what do you happen in those situations? Well, you need responsible enterprise-grade AI. So one of the companies, again, here in the room, Bria AI, is a forebearer of responsible AI because they focused on making sure that their generative AI platform from day one would be enterprise grade. And what do you mean by enterprise grade? It means that from the training data source to the models to the implementation, all of that had to be secure and safe. So 100% of the training data is copyright protected. All of the open source models are validated and authenticated. The on-prem, if needed, deployments enable customers to use it without worrying about where their data is going up. And this is why these companies are doing well. So while we talk about the potential of AI and all of this is exciting, we all know that for AI to really be proliferating across the entire society and be used by enterprise customers in industries that are very data sensitive, then a lot of problems have to be fixed. ChatGPT, you cannot use it. But there are companies like Bria and others that are working on that. The second company I'll talk about, and this is hopefully to give some hope for entrepreneurs, this company is called Abacus. It's a relatively new company. When we met them, the company had bootstrapped, meaning they had raised zero venture capital dollars to find customers in the financial industry where also data sensitivity is huge. It's actually illegal for consumer financial data to leave the premise of a credit union, a bank, or an insurance company. At least it's in the US, and I'm sure it's the same in Korea. So what they did was they worked with customers to build a on-prem LLM service. So they actually would set up a service where they would actually establish the infrastructure, create open source models, enable their financial institution customers to train on their own internal data. They would also provide an application development platform so that your customers themselves then create their own internal ChatGPT so that they can take advantage within the enterprise the power of AI. And this company is growing like weeds as well. So if you solve the particular bottlenecks that prevent widespread adoption, especially in the enterprise, then those are big opportunities. So examples like Bria and Abacus are great examples to enable AI proliferation across the board.
Yeah, and I think one thing I noticed across all the examples that you shared, everyone's very excited about AI, ChatGPT, and all the applications. But I think the core aspect of venture capital in Silicon Valley is what problem are you solving? You shared 4 companies that have identified a very specific problem that corporations are dealing with, and rather than saying, how do I get into the AI space? The question is, how is AI going to help me solve this problem
Correct.
in a way that I couldn't solve before? So identifying that problem, solving it with the new technology, and I'll throw in that you guys talked a lot about relationships and how those have built over time and led up to what we have today as well. We have a minute left. Any final words that either of you want to share to the audience?
Sure. Just to reiterate what you said, I think we kind of simplify our lives. I do. I look for companies solving really hard problems for really large markets with great founders. That's how I wake up every day. That's what I'm looking for. So that's the last thought I'll give. And then I just want to thank everybody for coming and listening to us. Really, we're in such an exciting space right now. I mean, we love what we do because there's no better time to be alive and in the technology industry, or quite frankly in the business community. I mean, we started this thing, Jay and I, because we thought this was going to be the biggest disruption we've ever seen in our lifetimes, and so far it's probably even bigger than we thought it was going to be. It's just a new form of computing, and it's driven by the ability to do magnificent, huge amounts, put magnificent amounts of compute horsepower across problems that use large amounts of data that we've never been able to do before. And hopefully, we can supply enough power, cooling, buildings to just keep this thing going. But I think, the world is changing rapidly, so we all better get on the train or we're going to be left behind.
Please offer our speakers a round of applause. Thank you.
Thank you.